Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein of Linn & Associates with your metals market update for this Monday, the 15th of May, 2017. You know, gold got a bid off North Korea's new missile, but I don't call $2 that important of a bid. That becomes the dilemma. You did get up during the day to 1237.40. You slipped back. Now, please understand, I see the charts as being more favorable than unfavorable. I see the dollar down is offering a boost to it, and the stock market's still going up, which is nice. And interest rate sector, well, it's not going one way or the other right here, sort of just drifting along, not doing an awful lot. As we take a look at the weekly chart of gold, you can see how the market's got a pattern now of higher lows. Yes, today's action cleared last week's highs. Therefore, you have higher lows and higher highs. Unfortunately, it did not close over 1237.50. It got to 1237.40, and I think that those that look at the 18-week moving average of closes probably sold into that number, figuring that's going to be the big resistance point. What you don't want to do if you're bullish is see last week's low of 1214.30 hit. If it's hit, it will set up a pattern of lower highs. You already have the higher high there, and then lower lows. And that will set up a test potentially, I think, of 1208.90, and if that gives ground, 1180.540. So you're not out of the woods as a bull. You're better off than you were last week, and the market doesn't have upside momentum yet. The market bounce from 1216.10 on a closing basis carries you up today into this 1230 something range. Okay, that's nice, but not a big bounce. And you can see that right here. Also, if you can envision a downtrend, you approached it today, but you didn't bust through anything. When I go to the market on the swing line, I get a very different story. The swing line is out and out bullish. Higher lows, higher highs. So I've got two elements here that are bullish. I've got the swing line in reality now on the weekly charts bullish and the daily. This number doesn't want to see 1216.90 taken out, the weekly 1214.30. If we can get a rally, the 18-day average becomes the major resistance point. Now, in looking at the market, I got what I wanted from last week in the sense that if you'll recall when you got under the 100-week average, I said normally the first challenge of that, you get thrown back to the upside. That's exactly where we're at right now. So if it can get some legs under it up here, you start coming through these numbers, the 1212 area, say, big problem in the market. And I'm not saying that will happen. I think the market's now got a certain amount of bulls, a certain amount of bears, and it's not in balance at this point. Bollinger Bands you're no longer in play with at this point. You'd have to take out that 1214.30, 1216.90 to put it into play, and certainly it's too far away to talk about. It's the 18-day average that's more in play than anything, and you lost your embedded reading on the close, which puts the 18-day average fully in play as long as tomorrow you don't regain the embedded reading by dropping hard. So I think the market's got a shot here to give you a lift. And I say that because when we get to the ETFs, you'll see what I'm getting at. In terms of the gold-silver ratio, I had mentioned that I thought that you made a peak up here, and I'm going to stick with my thoughts. I wish I could give you an idea how far it can drop, but you could probably do some Fibonacci counts from taking this low to that high to see where your third, 50%, 62% retracements are if you were interested. On the gold ETF, what I like is you lost the embedded reading here too. So that's good news. That also says that this key average, the 200-day at 119.16 and the 18-day are in play unless you take out 115.56. But the strongest of the group is right here. And that has been the gold miners. And I know I mentioned that they have been leading the path to the upside. Do they have enough strength to get up to 2362 is the big question, because they're already in overbought territory. So you've got to be nervous about that. Should you see today's lows of 2248 taken out, I would think that you're going to be backing off towards that 18-day average. If not, then the 2362 is in play. In the silver market, you lost the embedded reading. Therefore, the bearish condition is lost unless, again, it embeds tomorrow. And it also has the pattern of a lower low and a higher high. So even hanging in there for it to come back, you have to rebuild the whole bear pattern. The odds favor 1690 at this point. But remember, that 18-day average is going to fall each day. Right now, it's losing about 9 cents a day if you take a look at that. So that number is going to get closer into the 1680 zone for tomorrow. In the silver ETF, you also lost the embedded reading. So as a group, the metals lost that bearish phase that they had. Now the question is, can they build on it, or is just this a tickler, if you will, and the market slips back on you? Copper, only up to the 18-day average. And if you looked at the numbers coming out of China, even though copper was up, I was going, why is it up so much? I didn't see anything good out of the Chinese production numbers. They're still talking 6.5% growth, not 7%. The platinum market did get up to the 18-day average, a brick wall, if you take my charting course, stopped right there. You lost the embedded reading back here, if you take a look, right here. And when that occurs, you're often looking for price in the 18-day average to come together unless the very next day it re-embeds. It did not. That puts this fully in play, and that's exactly what occurred. The palladium market had an outside day down, so you have no trend. Now you're just stuck against this 18-day average over and over. Momentum is still pointing down, trendless market. Dollar index in a corrective phase, but not a trend. Higher high, lower low, bias down, and momentum down, but not trending per se. So you put that all together and you got to ask yourself, what do you got? And you scratch your head over and over. We cover a lot of this information in our research. We have a crew of people that write, and you get all day long and through the evening ideas. If you say you're a hedger of some type, we cover that. If you're in the cattle market, the grain markets, cotton, sugar, we really cover this in great detail. And of course, I cover for you in a massive way the financial markets and so on. So you can sign up for the Linn Group research. You might want to take a trial to my own research because I do keep it separate from that. And I think you'll find it fascinating. How do you get it? Well, you can either call us, you can go to our website. Underneath us on many websites, it says, click here for Ira's free offer. The form will come up. Just choose it from there. Or you can click right here. If you're watching me on YouTube, you'll see an icon. Click on that. The form will appear. Choose the Linn Research and choose the categories you want. You don't have to get all these categories. I'm Ira. You have a great day, and I'll see you tomorrow.